should get you should all be getting a weekly newsletter, and it has like 6 or 7 links on it. One of the links is to our training, which is all of our YouTubes. So they are posted there. So today I have no one in the office. Nobody is going to win $25.
Dang, I should have came.
I know.
I'll be there with cupcakes later and cookies.
Wait a minute. Oh, Kelly just came in the office. Kelly's going to win.
Woo!
Woo, Kelly.
Smart.
Because you're there.
All right. So we are going to talk about setting proper expectations for your buyers. This is your chance to differentiate yourself from the other agents out there. This is something that most people do not do. And I'll be honest, I haven't done this all of my career either. But I'm telling you, in my opinion, this is without a doubt going to be able to set you guys apart from anybody else out there. So, and this is the first time I'm using PowerPoint on my own. I did it all by myself, so hopefully it works properly.
Yay!
If not, if I did it wrong, Jen will help me next time. It'll be better. So we're going to go ahead and jump through this. I got to change that. All right. You guys can all see my screen, right?
Yes.
Okay. Setting up proper expectations of your buyer. So many have heard the term champagne tastes on a beer budget, right? We all know that term. We all know that that's what people are dealing with. Everybody's got their own personality. And so this is where it is super important that you as an agent are setting expectations. And one of the very first things you got to start with is you got to start to engage them with what their wants and their needs, their dreams, their desires. And ultimately, it needs to be an intake form. And I will guess that every lender has a specific intake form because they're asking for pay stubs and fill out an application. And we don't really have that, in the beginning. There is no, what do you want? Unless you sit down specifically with your clients. You meet someone at an open house and they're kind of, oh, we want a 3-bedroom, 2-bath. We want 500,000. You've really got to sit down with them and go through that intake form. And then ultimately you're going to need to push past that even more. And we'll talk about that here a little bit later. So the intake form should be a standard form used for all your buyers. It should consist of a series of questions like, where do you want to live? Why do you want to live there? Is it close to your work? Is it close to family? Is it in a certain school district? You should be a series of questions you should be asking, right? And then you should be asking, so what are must-haves? Bed count, bath count, garage size, yard size. I'm sure they're going to tell you things like, I want an open concepts. I want granite countertops. But one of the questions you guys should be asking as agents is, what is an affordable payment for you and your family? Now, I know this is kind of going to seem a little odd, but in my opinion, it's actually the better question to ask, because you're going to hear people say like, I want a $500,000 house, right? And I'm sure you've all heard that. I want a $500,000 house. I want a $700,000 house. Well, in my opinion, that's the wrong question. I think you need to ask the question is, what is an affordable payment for you and your family? So I started to get into this here. So people are going to say, I want a $500,000 house. And they're going to say, I want to be in Roseville. But what they're not thinking through is, if I could live in Citrus Heights and get more of a house, if you start to expand that box, if you're starting to ask questions like, hey, what about Citrus Heights? What about Antelope? What about, Sacramento? There are areas you're going to be able to get more house than you're going to be able to, in an area like Roseville. So you need to start to expand those areas. But the bigger question really is going to come down to buying power. And Stacey will get a chance to talk a little bit later, but I don't know if you guys know this, there is a new program that came out where you get a 20% down grant. And there is, some obviously stipulations behind it. And I'll let Stacey get into it. But a $500,000 house with a $100,000 grant that you don't have to make payments on just changed your monthly payment. Yes, it changed the overall cost or value of the house you can buy, but ultimately the thing it affects most is the buying power, right? There's another thing that you can look at, like VA loans. Well, VA loans don't have MI, so their payment is going to be less on a $500,000 house than an FHA person, right? Also, we've talked about rate buy downs, 2-1 buy downs. There's different things you can do to adjust that payment. And that's why I say to you guys as agents, you need to ask the question is, what's a payment that is, affordable to them? Another thing that people won't think to ask is, well, what if I could get you that 3% interest rate? And people are like, well, I didn't think 3% was available. Well, 3% might be available if you went with an adjustable rate. Or what if I could find you someone that has an FHA or a VA loan that's assumable that has a 3% rate? Today's rates are 6-ish. Like I said, I won't quote anything. Let Stacey get into that later. But
6-ish is about right.
okay, thanks. But like I said, as you're going through this series of questions, as you are taking this intake and you are asking questions, you are going to set yourself up as, hey, this agent is asking me better questions than the last person did, or they're starting to open up to you because they didn't know that there was a 3% interest rate. Or I actually saw this, it was probably about a month ago. There was a house for sale that was a VA assumable, and the rate was 2.25. It was a $450,000 house. It was in Citrus Heights, and it was a 2.25% interest rate. The payment was like $1,900. And it's like, well, how can I get that rate? And so that's why I said it is super important that you start to ask questions and really set proper expectations for your clients.
So can I say something about that VA part real quick?
Yeah, for sure.
So on the VA assumable, everyone's super hype on that, but the seller has to start with their servicer to make sure that they'll even allow that. So it says assumable, but that doesn't mean that the servicer is going to allow that person, and they have to qualify for that particular product. Obviously, they probably would with the rate being so low, but the seller has to start. So for expectation purposes, seller has to start with their servicer first to make sure that they'll even allow to do that. I've yet to see one come to fruition, but I guarantee you they have, or they wouldn't have it as assumable.
I just talked to Maria Spate at Placer Title, and somebody in her office was closing the first assumable in their office.
Good. Maybe they're getting more open about it. It depends on the servicer. Yeah.
Yeah, gotcha. So thank you for interjecting that.
Yeah.
Appreciate that. But like I said, as you're setting expectations for your buyers, I mean, you're ultimately going through a series of questions. You're engaging your client, and you're ultimately setting yourself up to ask better questions than somebody else has, or helping them to understand the process better so that you can help them get the right expectation, right? So once you've had a solid discussion, ask the right questions, you push the envelope with them. And I learned this from Brent Gove, and we had a meeting with him, I don't know, a couple months ago, and he said, okay, what if I could find you the perfect house and it was $200 a month more than what you said was in your budget, right? So they're like, well, I really want to live in Roseville. We want a $500,000 house. I want my payment to be $2,200. And I said, gosh, I found this house. It's in Roseville, and it's $550, which pushes your payment by about $200, because I already called Stacey and asked, would that be of interest to you? And they're going to tell you, you know what, if it was the perfect house, and maybe if it was in, the perfect school district, or, if it wasn't on a busy road, whatever. So you have to help push that envelope to help them see what is it that they can do. And they might tell you, you know what, I can't, we're maxed out. That's 53% debt to income ratio. Stacey told us don't push a penny over, whatever, right? What if I say, hey, listen, I could find you that perfect house. So we have a lady named Teresa Tift in our office. She's been working with a guy named Zach for 3 years. He has some issues with not like financially credit stuff. He's a veteran, and he had just some other things that he was concerned about. And she finally pushed him to look outside of his area. He wanted only Placer County. He really wanted acreage. He wanted all these things. And then she finds him a house in Citrus Heights that happens to be on like 1/3 of an acre, but it had a 3-car garage. It had a shop. It had everything else he wanted. It took him a while to get there because she didn't think, she listened to what he said was, I really want to be in Placer County. And so she comes to accountability group. We kind of worked through some things with her. She pushed him and pushed him and pushed him. And finally he said, you know what? If I could find the right house in the right area, you know, or in the right, made all my criteria, I guess I could live in a different county. And so she found him something in Citrus Heights, and he finally closed on it about 2 weeks ago.
Nice.
Another thing that, you know, people don't quite understand is, what if I could find you the right neighborhood, the right school district, and the house is a disaster? And they're like, well, it doesn't have the countertops I want. Well, it needs a new roof. You know, we want all hardwood floors, and it doesn't have an open concept. Well, what if I could find you that house in the neighborhood you wanted, and I could bring in a contractor and a great decorator and help you work through that person and go, let's get new kitchen countertops. Let's blow out this wall. Let's do all new flooring. Let's do dual pane windows and put a roof on it for you. And we can get the purchase price and the rehab all fixed into one, and it meets your budget. Would that work for you? I will bet that almost any buyer that says, I get to pick out the countertops I want, I get to design the property I want, I get to, you know, add some extras, and no one else has ever mentioned this. Just so you guys know, I'm talking about a rehab loan, a 203K, 203KS, and then a home styles or home something else. I forgot what it's called.
Home ready.
Home ready. Yeah, here you go. Thanks, Stacey.
Yeah.
Yeah, I knew there was a good reason to have you on here today.
That's one.
So, I mean, these are things, these are questions, these are expectations you are setting for your buyers that, think about it, as you go through this process, they are saying, wow, Tammy has asked better questions. She has helped me to expand my thoughts. She has helped me to look at things in a different avenue, a little different angle. And it is really helping me to realize that I can probably get pretty much the exact house I want. We just might need to change one or two little things, right? Most clients also need to understand that what they want is not always out there. Today's market, the inventory is limited. So we may need to have discussions like, hey, what if we could look at off-market properties? You know, I can go back and look at the properties that didn't sell, they expired or came canceled in the last 6 months in the areas that you want. I could write letters to those homeowners. I could go door knock those neighborhood. As agents, you guys can find out, you know, what their needs are. 4-bedroom, 2-bath, 1,800 square foot with the pool in a certain area, city. Your title company can help you to pull that data, and you could send letters. You could find emails and phone numbers and make phone calls. There are other ways for you guys to look outside the box. And then again, they look at you and say, I never would have thought of that, right? These are another thing you can do to kind of set yourself apart is, like I said, mail to the neighborhood. But you can also say things like, hey, our office or my team is very large, and I can go and engage with the team that I have and ask who has a listing coming up that might meet this criteria. If you guys are part of Facebook groups or LinkedIn groups of local realtors, you could say, I have a buyer looking for a 4-bedroom, 2-bath in Antelope under 500,000. Does anybody have anything like that coming on? You can go to the Placer County Association Realtors. You can go to the SAC Association Realtors, and you can put up, they call it a want to need, and say, I have a buyer looking for this. Does anybody have that? And these are other things, like I said, that I don't believe a lot of agents do this. So you are building better rapport and continuing to show them that I am doing all these things different than the next person, right?
Also, use your favorite lender who has 5,000 friends on Facebook.
There you go.
Send me the criteria and I will shoot it out there, and most likely somebody's got at least one lead. Usually I get a handful, but sometimes I get a few.
Awesome. See, there you go. There's another thing. Stacey, that's number 2 for you today. So if you do all the things above that we talked about, you're setting yourself apart from most of the other agents in the area. You're helping your clients to understand the market. We talked about, you know, limited inventory. We talked about the fixers. We talked about all these different pieces that, like I said, most agents aren't going through this process. I would say this, most agents, and I have done this myself. I look at what is on the market is the first thing I go to, and I'm like, oh, there's nothing available. And then of course I have a client message me and say, I found this house, right? They found it somewhere, Zillow, Redfin, whatever. And it was an off market, or it's a, Zillow's not always 100% accurate. And they're like, oh, I found this property. And it's like, well, that property's not realistic. So you're now setting yourself as understanding the market better. And they're not going to go to those other, websites and say, well, I don't trust my agent. I don't think they're getting me everything. You have helped to expand their thought process. But also during that process, you're listening to what's important to them. You're becoming their trusted advisor. You're also becoming a specialist in their eyes because you are asking so many questions and you are getting them to think outside the box. You're building a long-lasting relationship. And in my opinion, if you do all those things and go through that list of questions with them and really work on, probably close to an hour-long conversation. And of course, if you can be face-to-face with them, having a cup of coffee, grabbing lunch, whatever, even if you meet in the office here, it is you building that relationship where they're going to go, you know what? Jennifer is my trusted specialist. Tammy Brock is the only agent that went through this list of questions with me. They, in fact, are my people. This is who I want to stay with. This is where I'm going to go. So that is it for my little presentation. What questions do you guys have for me?
Do you have an intake form that you've made up that you use as a template for everybody?
That is a great question.
Are you going to do that for your?
So I actually just did a bunch of interviews. Stacey knows this because she was one of my people interviewed, and we created a series of videos for our buyers. And I'm waiting on one more, my home warranty. And one other thing we talk about is that buyer intake form. And you know what? I am in the process of creating it and making it right now. It will be created by the end of the week, and it will be uploaded to this video. So it'll be attached.
It should be.
What's that?
Should be online. I guess you could do both, but I think the online would be. I would prefer that.
Yeah, so we're going to create it from a PDF standpoint for those that want to fill it out. But we have learned how to use Google Docs really well as of recent, Jen and I, and Kelly. So we can create it online within our New Vision Google Docs so that anybody can go there and grab it and share it into their own files. That way they can go through and obviously adjust it as they see fit. But we're going to go through the series of questions I have here, and then a few other things that I have. So
the same questions that you ask when they come to me from my realtor partners, I ask almost the exact same questions.
Okay.
Because I like to get an idea and kind of tee it up for the realtor.
Yeah.
Are they willing to go to Orangevale, Citrus Heights? Yeah. Because they're like, we want this and we want that. And I'm thinking, price wise, a lot of times it doesn't match, right?
Yeah.
So I try to help them and tee it up and say, hey, have you looked in these areas? Because those areas have big lots, homes that need a little bit of love, maybe outbuildings for 100,000 less to start with.
Yeah.
So I go through those same questions and ask them just so that I understand the clients as well. And it helps me remember them, by the way, because I do 5 times as I deal with 5 times as many clients as a realtor would, right? Because I have 20 people that send me deals. So I have to remember who the clients are and where they're looking, but it helps me to remember what they need and what they're looking for.
Gotcha. Very, very cool. Who is Ready Now's iPad?
Who
is that? Admin, we know is Kelly. I obviously see the faces of the rest of my people. Who's Ready Now?
Somebody's sneaking in.
I know, right? I've seen it before.
I don't have an iPad.
Hopefully it's not one of those dirty videos like at Brent Gove's little online thing.
Yeah, I wasn't there, but I did hear about that.
Oh my gosh, it was funny.
Oh my God.
All right. Well, if you guys don't have anything more to ask questions of, obviously this is a kind of a short one, and hey, that's the way it goes sometimes. Stacey, why don't you share with us what's going on in the lending?
Yeah. So rates are in the mid 6s, but like what you said, it's sometimes we can get into the high 5s, but between conventional at 5% down and FHA at 3.5, we'll just start kind of at the mostly what I get. They're at about 6.5 with no cost. So you can buy it down. We of course are hot on the buy downs right now, the temporary buy downs, not a permanent. So if people want details on that, call me on that. I am going to the training for the 20% CalHAPA program on Monday. I'll get more details on that, but the general gist of it is you could receive up to 20% of your down payment with no mortgage insurance. So I don't know if they refer to it as a grant, because a grant means you don't have to pay it back. So whatever they call it. Upon sale or transfer of the home buyer repays the original down payment loan. So it's a loan, not a grant, plus the share of the appreciation in the value of the home. Now, from what I've read, it looks like it's going to be a sliding scale. So if you sell within a year or 2 or 3 or 4, the appreciation, if there's any, right, over the 20%. Yeah. That's how they determine what that percentage is. Okay. Income limits in Sacramento and Placer County cannot exceed 202 annually, which is a lot, right?
That's pretty decent, yeah.
But there is limited funds. So they only have $100 million for this program. So 20% alone, I don't know how many that equates to, right? So I'm sure it's going to go away quickly. But it's just another way to get the clients to me. I will then go over the regular down payment assistance products. I personally, because I do a lot of first-time home buyers, try to give them alternatives like, hey, can you get a gift? Hey, can you pull it from your 401k? Because the rates are 1.5 times less than the down payment assistance programs. So instead of 6.5, it could be 7.5 to 8% right now on down payment assistance. So then you go, wow, your payment goes way up, right? Yeah. So I give them both options side by side and say, this is what this looks like. Then all of a sudden grandma's willing to give them 3.5, right? Yeah, right. My grandma said she'd give it. If you can get me a seller credit and I can get a gift, then we're in, right? Yep. It's a huge motivating factor when you look at what the payment difference is. So, but they're there, and I always give everyone the option because everyone wants, a grant or free money or to kick the can down the road, right? But I can do all types of loans. And yes, VA and USDA are 0 down still if the property qualifies for USDA. I'm doing one in Lake County right now, which is cool. Yeah.
Real quick, I have a question. So I mentioned it earlier and I've heard it said before, adjustable rate, probably like a 5-year ARM-ish. What kind of rate are we talking about for something like that right now? Just
it's higher than the fixed rate, which is weird. Yeah. So the only category that makes sense is high balance and jumbo. That's where you're going to get a better rate on an adjustable. They just don't want, the market, there's no market for them right now. So the lenders price them higher so people won't get into them because they know that they're going to refinance out of them probably sooner than 5, 7, or 10 years, right?
Yeah, exactly.
And they lose their ass on it.
Oh,
make sense?
Yeah.
So only high balance and jumbo, does that make sense? Conforming, don't even, I look at it and I go,
okay.
And if the rate is apples to apples, the cost is 2 points because they don't want you to take those, right? They price you out of the market on those.
Gotcha. Okay. Good to know.
No go on that unless it's high balance or jumbo.
Okay. Awesome. Yeah. Cool.
I tried. I was looking. Everyone wants to know that question. I'm like,
so temporary buy down, 2-1 buy downs. Those are the best.
2-1, 3-1. As long as the seller's willing to contribute those funds, it's a great freaking setup. Love it.
Okay.
Yeah.
Awesome.
All right, folks. Sounds good. Thank you all very much for being here. Like
Thank you.
Thanks for having me. Bye, you guys.
Talk to y'all
Bye.
soon. Bye.
Bye.